Hello everyone, and welcome to this presentation of 5 exit strategies that will change the way you trade. Now, almost on a weekly basis, I talk with students or actually other traders who say, well, Steve, I feel comfortable with the way and the method in which I'm trading, but it's my exits where I have difficulty with. Either I get out too early and leave a lot on the table, or else I'm holding too long, and then when I had a nice profit, it turns into a nice loss. Well, in today's presentation, I'm going to be sharing 5 techniques with you, and you'll be able to implement them as soon as today if you'd like. And I'm going to show you in this example here with Apple how you could have taken this buy signal, one of our strategies buy signals, and taken exits such as this place right here at this level, or this one, or even at this level. Okay, I'm going to share with you exactly what the rules are to these different strategies and techniques for exiting, and hopefully they will be able to change the way you trade in this educational webinar. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading, and as you can see, we are all about educating you as traders. It's our belief that the reason why most traders fail, it's been estimated upwards of 80% of all traders fail, is because they're taking themselves out of the game. In other words, most traders rely on someone or something else to tell them how to trade. I mean, look at your own trading. Do you go to a daily chat room or a trading room to find out what to do that day? Or do you have a signal service that tells you exactly what to be buying, what to be selling, what the perfect time frame is? Or do you listen to the news to tell you when to get in and out of a trade? Or perhaps you have some trading guru you watch on TV that tells you what you should be buying and selling. This is the majority of the decision-making process with most traders. And I say that from firsthand experience because that's the way I used to trade. But ultimately, it's a recipe for disaster because you're basically telling the markets, I have no idea what to do. I'm not good enough to make my own decisions, so I'll rely on someone else. And that's where the fault is, and that's where most traders fail. So what we do with specialist trading is we provide you with all that information. We provide you with all that education so that you can be putting yourself back in the driver's seat, so that you can make your own trading decisions. That's how you get on that road to consistency. This is what that has allowed me, in my own opinion, to be able to trade for nearly 40 years because I suffered my first year or two of trading as well. I started out trading on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years. 9 of those years I was a specialist. Right, a specialist was simply a trader that made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular issue, you went up to the trader that specialized in that. So I did that for roughly 9 years. I traded during the crash of 1987 and the bull market that followed. And even though I had all this advanced information and I was privy to a lot of information, I could see the books in my stocks. I had a very difficult time my first year or two actually trading. So I had mentors that were able to turn my trading around, and this is what I want to do to all my students and all my members, and actually to all the attendees today. At least give you some information where we're unlike other webinars where they're just trying to constantly sell you something. We would like to at least give you some information that you can walk away with and start implementing as soon as possible. So today I'm going to actually give you 5 strategies, 5 exit techniques. Hopefully you can implement in your own trading that will increase your odds for success. But before we begin, we're required to show you this. So as always, please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these particular strategies. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. So as you are taking a brief moment to look at our required disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. In fact, you may want to copy down our handle if you're not familiar with our handle there. It's an abbreviation for Specialist Trading at SPCLSTTRADG. I post information on a daily basis, anywhere from just little tidbits of wisdom along the way to actual signals that our strategies have generated. In fact, one of our strategies generated a buy signal in the Forex markets just a little while ago in the dollar yen, I believe. And so our methods can be transferred over not only to stocks, but also to futures and currency pairs as well. So it's a lot of great information, and feel free to follow us on Twitter. All right, now, as I stated in the very beginning statements, we are first and foremost an educational company because that's really what it's all about, supplying you with education that will, hopefully sustain your trading, not just a couple of years or a couple of weeks, but 20, 30, 40 years down the road, because that is really the true meaning of success. When I was on the trading floor, I knew tons of traders who made relatively small fortunes in a small amount of time, anywhere from hundreds of thousands to millions of dollars. And guess what? Not one of those traders is trading anymore because they've given it all back. So that really is not the true definition of success, to how much money you can make, the way so many other, presentations promise the world. We do not promise or believe in that. All we are trying to do is establish some amount of consistency in your trading. That's what we're trying to do, so that this consistency will be able to sustain you down the road. Because whether you like it or not, it's not about the amount of money, it's about the ability to trade as long as you like. That really is the true meaning of success. So as you can see here, my goal is not to force feed you signals, is not to force feed you the perfect time frame or the perfect market. It's to basically teach you how to trade with the same edge. This is this edge that was able to turn my trading around and be able to establish me and sustain me for nearly 40 years. And this is the same edge I teach to all of my students. So I'm going to teach you a lot of information today, but the one thing I'd like to state, if you're once again new to my webinars, I love to take questions since this is a class, but please wait till the very end of the presentation to ask any class questions, because many times if you wait for the next slide, oftentimes the question is answered. So we have a lot of people here in attendance today. I have a lot of great information to share with you. So if you have any questions, we'll cover them just about the next 20-25 minutes from now, okay? All right, so let's begin. Oh, you know what? I will answer one question. I'm sorry. The one question, which is probably the most common, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties, many times just turn off your computer and come log back on again. You'll remedy that. But if you don't see the entire presentation, you can request a link to this from Pro Trader Strategies. They will send you a link to this recording. All right, let's begin now. And let's start out by talking about these 5 exit strategies. Let's take them individually, step by step. And we'll look at the same Apple chart here, the same example, and show you how you can apply these to the same chart. And it doesn't matter, remember, we're going to be sharing with you on stocks, but you can apply these to intraday futures trading, intraday stock trading, monthly or long-term investing, currency pair trading. It absolutely makes no difference, okay? And one of the things I want to say is that these strategies are not designed to get you out at the extreme high, okay, or if you're short, the extreme low. They're just designed to capture as much profit as possible using that particular method. But in no way am I going to say that each one of these will get you out at the very highest tick, and conversely at the very lowest if you're short, because you can use them as well if you are short and want to exit, trying to capture as much gains as possible. They're just trying to get the meat of the trade, and each one has a different means in which to do that. All right, let's start off with one of our most popular ways of exiting. We use this in a number of our strategies. This is called range extension, okay? Now, a lot of people are not familiar with this, so let's just take this first example here. Remember, we're going to be looking at the same chart, but if this was the day our signal was generated, as you can see here, this is what we call our signal day or a setup bar. In other words, everything is set up on this particular day. This is the day that you decide either at the close of that day or the next day that you're going to be going long based on the requirements of the particular strategy, all right? So what you want to do with a range extension exit is measure the range from top to bottom of that signal bar, okay? And remember, you haven't entered yet. This is the day that the signal was generated. So you measure the range. Now in this case, I believe it's close to 4 points, but it'll differ depending on the time frame and depending on the market. It may be 2 points, it may be 50 cents. It all depends on what you're trading in the time frame. In this case, it's roughly about 4 points. So you take that range or that amount of points and you simply double it from where the top of the range of that setup bar is. And that's your 200% exit. So you can elect to exit here at 200%. If you like, you can take that same range and add it one more time to the top of that 200% level, and that is your 300% range extension exit, all right? And then lastly, you can take it once again, whatever the range amount is, in this case, roughly about 4 points, add it on top of that 300% top level, and that's your 400% range extension exit, okay? Now, we always tell our students that this is the extreme move, especially in the beginning, that you should use in order to exit. In other words, oftentimes you'll see it go 500, 700, even 1,000 point, range extension. But we don't suggest that you wait that long. We have noticed that over time, that most of the time, it's not written in stone, and there's no statistics to prove this, but most of the time, the trend will last roughly to about the 400% level, roughly around that area. And that's where you should be out of the trade entirely. And as you can see, even though you would have exited here, went down a little, and then back up, eventually that was the top level, okay? Now, there are a number of ways in which to trade this. Remember, we teach and trade strategies. We do not teach systems. A system requires you to trade the exact same way each and every time. We don't believe in that because, once again, what are you doing when you trade that way? You're taking yourself out of the game. You're letting a system trade for you. We want to have about 25 or 30% discretion. So even though we know where these exit range levels are, we can decide either to exit at 200, 300, or 400. We can take part of our position off the table here at 200, then part at 300, then part at 400. Or once we get up to 200, we can move our stop wherever it is up to unchanged. Once we get up to 300, we can move our stop up to 200, and so on. There's a million and one ways in which to trade this, and this is what we encourage. We want you to trade what makes you feel comfortable, because that's what's going to get you on that road to consistency. It's not going to be coming from me telling you exactly where to enter, exactly where to exit on a daily basis. That doesn't mean anything, because if that were true, then everyone would be a millionaire if you just copied someone who's successful. It doesn't work that way. There's always your personal traits or your style or your risk aversion that comes into play. So you need to know the information and then decide for yourself. So this is range extension technique or strategy, and once again, all you do is you take the range from top to bottom of the day the signal was generated. Now, if these were 5-minute bars, you'd do the same thing on a 5-minute time frame. And then you can simply double it: 200% range extension exit, 300% exit, and 400% exit. It's up to you. All right, that was technique number one. Let's go to strategy number two, and this is pivot highs, pivot lows. This is a very common way in which to hold on to a trade that has begun to trend, and all you're doing is taking the pivot highs and lows of the actual bar chart that you're looking at, regardless of time frame or direction. Now, for those of you who aren't familiar with what a pivot high or low is, it's basically a 3-bar pattern. All right, if we're looking at pivot highs, it's a 3-bar pattern where bar number 1 makes a high, bar number 2 makes a higher high, and then bar number 3 makes a lower high. So you kind of have this kind of an arrowhead approach here. This is what you're looking for if you're short. But if you're long, as we have in this example of Apple, we're looking for pivot lows. Okay? Why? Well, we'll show you in just a second here, but a pivot low creates a low on bar number 1. It creates a lower low on bar number 2, and then a higher low on bar number 3. So it creates this type of a V approach here, a V look. All right, so this is what we're looking for in this example if we are long. Why? Because we are going to place our stop just below that pivot low. So if we see that we purchased right here, well, we wait for the first pivot low, and that's right here. All right, even though we went up a little bit higher, we haven't had a stop established yet, but we have that low, lower low, higher low. So this is our first pivot low. So once we've come to this point, roughly about 10 days after the entry, we know that we'll exit here if we go lower. And this is where the trend started to take off in Apple. All right, so we went up higher, and guess what? Right here we have a low, followed by a lower low, followed by a higher low. Even though it's difficult to see there, this is a very small, tiny, but it is an established pivot low. So you would place your stop right below here. Now it's up to you. This is where the discretion comes. Some of our traders like to place the stop, one tick below. Other traders like to do it 10, 50 cents, even a point or two below. It's entirely up to you. In this case, though, you would have been stopped out right here. So you would have captured some gains, but in this case, you wouldn't have captured the gains you could have with a 300 and 400% range extension. So you see, all of these methods have different ways in which to, exit you. So in this particular example, the pivot low would have gotten you out while there was still enough room to go higher. Remember now, if we are short and the market were going down, then we would be looking for pivot highs, and we place our stop just above those. All right, so that was exit strategy number 2. Let's go on to exit strategy number 3, and this is just adding a 9-period exponential moving average. Okay, a lot of people use this. This is something that a lot of traders used to use on the floor of the stock exchange to capture gains and to try and keep you in for a nice quick trend. So all you do, as we see here in this example of Apple, once again, the same exact example, we just apply a 9-period exponential moving average. And the way this works is once you have a bar that closes below, you have two options. You can either sell at the market on the first bar that closes below, or you can, just like the pivot low, place your stop just below that bar, that first bar that closes below. So as we track here, we have entered the trade roughly around here, and we're tracking. We haven't gone below. Do you see how the 9-period exponential kind of hugs this rally here? And we continue to go. Now here it looks as if we were closing below, but on closer examination, we actually closed right on it. So this doesn't count. This is really not an actual exit signal. So we're still in the trade, and it's good because we continue to go higher and higher. Now here at this point is our first bar that closes below. Now remember, we are saying it has to be a close below. It doesn't have to open or trade below, because we've gone below there a number of times, okay? 1, 2, 3, 4, 5 times, but they never closed below. We have to have a close. This is telling us that the market may be running out of gas, all right? So you have a decision to make. You can either exit on the close of that bar, and in which case, had you done that, you would have exited, and it would have been a tough next week because you can see we went even higher. Or you could have placed a stop just below that and said, well, if we go, 1 or 2 ticks or even a half point or a point lower, that's where I'm out. So had you taken the second course, well, you would have remained in the trade, and that would have been good because we went and matched those old highs. But guess what? Now we close once again below the 9-period exponential moving average. So you can either exit at the close or place your stop just below that. Now in this case, had you done that, you would have exited on the opening. So just roughly about the same place as the previous exit. So it would have been just about the same thing. So as you can see in this example, this will hug and try to keep you in. The only trouble with this one, many times you may get some false starts, but it's a great technique. Remember, experiment with all of these. All right, let's go on to strategy number 4. This is slow stochastic, okay? This is a very simple way to use a common indicator that virtually everyone has on their charting software package. This is a slow stochastic. This is just, something that, everyone has. It's not something that you have to come up with some proprietary tool. This is just very common. Just go to your indicator page and pick a slow stochastic. And here's what we want to do. We want to edit the default settings. Now, slow stochastic usually has the length, in other words, the amount of bars it uses to come up with its calculation. It's set up at 14. Okay, that roughly is basically half a month. They used to judge these off of 28 calendar days, so they just took half of that to set the slow stochastic. So it's set at 14. What we want to do is change that to weekly, so we're going to change that to default setting of 5. So simply go to your edit box, whatever charting software you're using. If you see the number 14, edit it to read 5, okay? If you have difficulty with this, just contact your tech support. They should be able to help you set this up, all right? All right, so we're changing it from a standard default setting of 14. The length, the periods should be now changed to 5. And the reason why we do that is because we want to have this kind of a choppy kind of look now. Remember when we were looking at pivot lows prior to this in the actual chart? Well, now we're looking for the same type of pivot lows in the indicator. So as you can see here, we have this type of a V approach right here. And this is what we're going to base our stop off of. Not off of the chart, but off of the indicator pivot, okay? But we can only really create these pivots with consistency if we go down to a 5-period length. So what you want to do is take the pivot low and then the next range of the stochastic, as you can see here, and between these 2 bars, that's where you place your stop below the lowest low, okay? So right here, if we see here, there's where the bottom was, and then the next movement was up on the indicator. Well, which of these 2 bars is the lowest? Well, this one is, obviously, so you place your stop just below there. Now, I know a lot of you are saying, well, Steve, this is just like a pivot low on the stock. Why would I need to track an indicator to get this? Well, because it's not the same. Many times it appears the same, and you may get the exact same stop as a pivot low. But let's go to the next one. As we see here, we made a low, pivot low right here. Here's the low, and here's the next bar up on the indicator. So these are the 2 bars we're looking at. And so you can see which of these 2 is the lowest. It's this one. So had we just concluded the day right here, we don't have a pivot low established. In fact, the pivot low was right back here, and there's where we would have been stopped out. So this has not had a stopped out yet. We're still having our stop placed right here. And now before we knew that we were going to continue higher, we would just simply place our stop right here, okay? So it's not the exact same as the pivot lows established by the bar chart. So now our stop has been moved up here. We continue to track the tool, the slow stochastic, until we create another pivot low right here, okay? So we have a low, and then here's the next move up on the indicator. So we're only looking at these last 2 days here, and which of the 2 of these bars is the lowest? It's this one, obviously, and as you can tell, this is not a pivot low. This is a pivot low according to the bar chart, but according to this indicator, we don't have a pivot low. We just have a lower bar here, so this is where we're placing our stops. You see how this is entirely different from pivot lows and pivot highs on the actual chart. All right, so our stop now is placed here, and once you have your stop in place, you can just leave it there and you don't have to worry anymore. As long as you have a nice trend in place, it's really helping you. And ultimately, you would have been stopped out right here before we started to go lower. So this, once again, is a very simple technique just based off the slow stochastic. Change the default setting from 14 to 5. All right, let's go on to our final and last exit strategy. And this is a little bit more advanced. I've talked about this in other presentations before, but this is for all you traders who like to trade candlesticks. This is our advanced candlestick theory. This is a technique I was taught to many years ago on the floor of the exchange. A lot of people don't know about this or use these particular techniques, but they've really helped me. And I'll just share with you one of them because this is a great way to look for the market if it's going to tell you what it wants to do. Because remember, we always tell our students not to listen to outside sources. I said at the very opening of this presentation that the reason why most traders fail is because you're taking your cue from someone in a trading room, a chat room, or some guy on TV, or some convoluted indicator. And basically, all of your information is coming from an outside source, and that's how you base your decisions off of. We want to only base our decisions off of one thing, and that's the source. That's the chart in front of us. So here's how we use this particular candlestick technique, because it's the market that's telling us what it wants to do through this particular advanced candlestick formation. All right, so here's once again our old friend Apple. All right, now in this case, we are going to have to change the bar settings to candlesticks. All right, so we just use our standard candlestick setting here, and here's what we're looking for. We're going to base this particular advanced candlestick pattern off of a very standard formation or pattern, which is called our engulfing pattern. All right, so this is called the engulfing pattern +1. Once again, I've spoken about this a few times, but let me just review for those of you who aren't familiar with this. Now, your standard engulfing pattern is a 2-bar pattern. All right, bar number 1 is usually down. Your bullish engulfing bar is down, as you see here with this dark body. And then bar number 2's open to close range is up. Now, bar number 2's open to close range engulfs bar number 1's downward open to close range. That's your standard engulfing pattern. What we want to do is engulf more than just one. We want to engulf one more, at least a minimum. That's why we call this engulfing pattern +1. So as you can see, we not only engulf the prior bar, but the bar prior to that bar. So this would be an engulfing pattern +1. Now, the more you engulf, the better. We've seen that there have been engulfing patterns +10, engulfing patterns +20, and ultimately you get a really strong, powerful move. So this is just the market, once again, through this engulfing pattern +1, telling you with a high propensity, most likely, that we're going to be going even higher, even better than your standard engulfing patterns. Now you can do the same thing for the downward move. Now this is your standard conventional bearish engulfing pattern. All right, bar number 1 is usually up, okay, as we see by the open body here from open to close, and bar number 2's range from open to down close totally engulfs bar number 1's range. What we want to do, this is all well and fine, but it doesn't, in my opinion, it doesn't have that high level of consistency as if you engulf one more bar. Now, where most students fall or have trouble with this is they say, well, Steve, does it matter what the other bars are? Absolutely not. In fact, both of these bars could be down. All we want to do is totally engulf more than one of the previous bars, all right, the range from open to close. As you can see here, we don't care about engulfing the extreme high or the extreme low. We're only caring about engulfing the open to close range, all right? And so it doesn't matter if we are up, or this could just as easily be a down day. All that matters is that we are engulfing the open to close range, regardless of the direction. Because an engulfing pattern plus minimum of 1 gives us a higher level of consistency that we're going to be going lower. So how could we have applied this to our particular setup here we have in this Apple trade. Well, let's go back and look at the chart. Once again, we have our same buy signal on this particular bar, all right? So we want to know, where do we place our stop, or where do we get out of this? You know, how can the candlesticks give us a good point of view about getting out of this? Well, as we see here, we have a nice rally in place, and we have a bullish engulfing pattern. So that's telling us, well, there's probably some more room left to the upside. But on top of that, this is a bullish engulfing pattern plus 1, 2, 3, 4, 5, 6. So that's a very strong signal, not coming from some guy in a chat room, but coming from the market, telling you that most likely we're going higher. And as you can see on the very next bar, we even gapped up higher, and we continue to go higher back in hindsight. But if we look for the next week, we're thinking, well, boy, you know, on this gap up, a lot of guys are telling me that this is a gap opening. That's a bad sign. Well, not really, because we have a bullish engulfing pattern plus 1. So once again, it's the market telling us that it still has some room left to go to the upside. So even though this isn't a standard, exit technique in terms of placing our stops, it does give us, a high level of consistency in telling us when this rally will be over. Because if we continue to track it, you would still be in this trade, and you can see we're going higher and higher until ultimately we have this bar. So what is this telling us? We have a bearish engulfing pattern plus 1. So this is the market telling us that most likely we're running out of steam. You may want to exit, or at least move your stop up very close, because this is the first sign since we got in that we may be topping out and we may be wanting to get out. All right. You see, the market is telling you all this. This is why most traders have difficulty, because we're listening to something else tell us what to do. But if you learn how to listen to the market, you don't have to rely on someone else, and you also don't have to spend all this tons of money. You can do it on your own. Okay. And you don't have to pay for all those services, because you are making your own decisions now. And once again, we can see the market told us that we were topping out, and look what happened. That would have been a nice place to exit. So that's our advanced candlestick. That's a engulfing pattern plus 1. So let's review before we show you some more ways in which to apply these. Remember, we talked about 5 strategies, and we want you to use these, but first, please paper trade all of these, just so that you understand the process behind all of them. Remember, request a video link to this so you can practice, and always paper trade first before using these, because there's so much more you can learn while paper trading. Most people that see these strategies, their eyes light up and they're all excited, and then they inevitably execute them or apply them incorrectly. So remember, there's range extension. You simply take the day the signal was generated, you measure the range of that signal bar from top to bottom, from extreme high to extreme low. We're not concerned with the open or close. We're concerned with extreme high, extreme low, and whatever amount of points that comes to, simply add that or subtract that, depending if you're long or short. You can exit at 200, 300, or 400. We always suggest that our students, especially in the beginning, to empty out of the full position by 400 level. Then there's pivot highs or pivot lows. We went over that briefly. Remember, a pivot low is simply a 3-bar pattern. A low followed by a lower low followed by a higher low kind of creates this type of a V approach. A pivot high is a high followed by a higher high, and then a lower high kind of creates this arrowhead. Okay, that's where you would place in your stops, okay, to get out. Then a 9-period exponential moving average. Probably the simplest way to apply these exit strategies is simply apply that one tool, the 9-period exponential moving average. And if you close below there, you can either decide to exit at the market, or you can simply place a stop below that. It's up to you. It's your choice, okay? Then we edited the slow stochastic tool. All right, simply go to your slow stochastic edit box, change the default setting from 14 to 5. And if you are going upwards in the stock, look for those pivot lows established in the indicator, not the actual bar chart, but in the indicator, and then place your stop just below the lowest low of those 2 bars, okay? And then lastly, we talked about advanced candlesticks, all right? In this case, we only went over one of them, and that was the advanced bullish and bearish engulfing patterns plus 1. Great tool, because they are basically translating what the market wants to do. Okay, and it's telling you in advance most likely which direction the market may be going. So that can tell you when to exit if it's giving you an exit signal. These are all great strategies, great techniques. We share them with our students. We're sharing them with you for free. You can start using them as early as today once we've concluded. I've only given this presentation a few times before, but this is the question, the email question I get from most people is they say, Steve, I love these strategies. Boy, if I would have known about this, this would have helped my trading tremendously this past year. It would have, like you said, it would have changed the way I would have traded. I would have not have exited so soon, or I would not have held on to trades and then watched them turn into losses. But here's the next part of what most of the questions and replies I get from members and students and prospective members is that, Steve, I don't have a strategy to apply these to. Either the ones I've been using just fail like crazy, they fail tremendously, or else, I've just started to trade. I don't have anything to trade with to apply these. So once again, they say, Steve, I don't have a strategy. So this is where we're going to take it one step further. We're going to share with you today how you can apply this to probably one of our best strategies and combination techniques for verifying the strategy. That's our dynamic duo, okay? You've heard me speak about this before because it's probably the most consistent method we have for any of our members and students at Specialist Trading. But what it is we combine strategy number 4. That's what creates the dynamic duo. We combine probably our most consistent strategy, which is strategy number 4. And let me show you an actual signal that was generated in a stock a while ago. As you can see here, even though the stock has been edging up higher, strategy number 4 generated a buy signal. At this point, people would say, well, Steve, I don't know if I can buy this because, we've already gone up a nice bit here. And the chat room I go to says that we should be selling the market. So how can I be buying this? Well, strategy number 4 is a great strategy because it has a very high level of consistency. But we have found that traders want a little bit more assurance. So what we've done is when we combine strategy 4 with our proprietary tool, the PET-D, we increase our odds for success even more in terms of consistency because the PET-D is a color bar tool. And all it does is translates what the market's short-term trend is. So all we want to do is make sure that these two tools are in sync with each other. So how do we do that? Well, here's our signal using just the strategy number 4 requirements. But once we apply the color bar tool, which is the PET-D, we see that it changes the colors of the bars. And we just want to be in sync, meaning that if we get a buy signal, as we have here, the PET-D must color that bar green. All right? That way, it is telling you that you have the confirmation to take that. There's a high level of consistency in that signal. So, as we can see here, it was colored green, and look what happened. In just the next week, the stock rose 6 points. This is the beauty of the dynamic duo because it gives you the confidence to take these trades. And then you can apply any of the strategies I just shared with you in terms of exiting. You could have applied the 9-period exponential moving average. You could have waited for a pivot to be established. Lots of ways to take advantage of this. You could have applied the 400 range extension to exit this. Now you can also apply this to the downside. These were 2 signals to go short PRGO using strategy number 4. And remember, strategy number 4 has a very high level of consistency. But if you want that little extra added oomph, that confidence level to take it, you simply add the PET-D, as we've done here. Now the PET-D will color the bars either green or red according to its proprietary calculation. If you get a sell signal, you want to make sure that that bar is colored red because that's the PET-D telling you it's okay to take the trade because now you even have a higher level of consistency. So, excuse me, had you taken either one of these sell signals, well, ultimately you would have had a very nice profit because the stock dropped 40 points in just 3 weeks, okay? So this is the beauty of combining these 2 tools. The confidence of strategy number 4, it's an actual strategy, comes with about 5 rules, and then the color bar tool, which is our PET-D. So let's show you some more dynamic duo examples, how you could have applied these, and then how you could have applied the exit strategies that I just taught you today. All right, let's look at this example here in letter K. A couple of months ago, coming into July, someone looking at this would say, well, Steve, there's actually no trend here. I mean, this stock for the past month is going sideways. Why would I want to do anything in this? I've always been taught you stay out of these whipsaw markets. This is the type of place where you lose money. And the chat room or the guy I subscribe to says you shouldn't be buying anything right now. This is the way 99.9% of all traders trade. You look for someone else to tell you what to do. We only listen to the market. And strategy number 4 listens to certain patterns within the chart. And according to strategy number 4, it generated a buy signal. Doesn't care that we're going sideways. It said this is a valid buy signal in letter K. All right. So let's say you have strategy before and you're like, well, gosh, I'm a little scared to take this. I'm not sure if I want to take this signal. Well, that's where the pet D comes in. We want to confirm it to give us that higher level of consistency. So we add the pet D, and even though the majority of the bars have been green, all we're concerned with is the signal bar, the setup bar, and that was colored green. So we have the confidence to go long letter K, and look what happened. Stock gained 10 points in the next 2 weeks. Okay. Now, do you think you could have applied any of the exit strategies I shared with you today? Okay. Think of the ones we just went over. Don't you think they would have worked very well in this particular setup? Now, let me show you this next example here. Oh, also, by the way, one of the beauties of strategy number 4 is that it will continually generate signals. If you happen to miss one, well, there's another one around the corner. Now, in this next example here in HRB, this is a great example because many times the best trades are the ones you don't take. And this is an extra added bonus that comes with the pet D. All right, as we can see here, it looks like we made what's called a triple bottom. Okay, let's say that the guy you subscribe to says, boy, this stock is really bullish. We've hit the support level. You know, maybe it's a support and resistance course, and you go, we've hit the support level. This is going to hold here. All the institutions are buying this. The volume levels are coming in, and everything is working fine. So all these outside sources are telling us it's okay. We don't care about that. We only want to listen to what the market tells us. And according to what the market has told us through strategy number 4, well, guess what? It's giving a buy signal as well. All right, so we're only taking this because the buy signal is generated through our proprietary strategy number 4 rules, which basically just listen to the market. But let's say you're just a little gun shy because maybe you just started, or you think this is a brand new way for you to trade. This is not something you've ever done before. So to give you that extra level of assurance, you add the pet D. And the pet D must color all buy signals green. So we add the proprietary color tool. And what color is the buy signal? The pet D is colored in red. So in all actuality, the pet D is saying, do not take this signal. Even though strategy number 4 has come up with its calculation and everything, all the requirements are met, the pet D is not confirming it. So that's the beauty of the pet D. You would not take this signal, and look what happened to the stock. You see how the pet D, a full week or 2 in advance of this big drop, had the bars already colored red. So it would have saved you a lot of heartache and sleepless nights had you been long. And remember, as I stated, once again, once a full-fledged trend is established, then strategy number 4 starts to generate more signals that are confirmed by the pet D. So the pet D would have kept you out of a losing setup and would have gotten you back into winning ones, since you would have never had a losing trade trading HRB in this example here. Now let's go to CCI. All right, we had 2 buy signals generated coming into June. They were both confirmed by the pet D, and this gives you the confidence to take the trade, and the stock gained 12 points in 2 months. Using any one of the tools I gave you today for exiting, do you think you could have captured some nice gains using any one? Remember all of the 5 strategies I just shared with you and revealed today. All right, they all would have captured some nice gains. All right, now here's one more exit strategy I want to share with you, but this is only if you have the pet D, because this is another great way to decide when the trend has changed. As we can see right here, we're in a nice profit. Now, if we wanted to capture all this using the technique I'm sharing with you, you'd still be in this trade. You would not have exited at all. You've had about nice 10 to 12 points under your belt. And then the very next bar you have here is the first red bar. Now, this is one technique for exiting using the pet D. So what you would want to do is simply place your stop just below that. If you're a more advanced and aggressive trader, you could have sold on that, but it's up to you. Remember, we're just giving you different techniques. It's up to you to decide how you want to do it. Most of our students would simply place a stop below there. 20 cents, half point, full point, it's up to you. And that's just based off of the first red bar, because it's the pet D telling you that, well, perhaps the trend is changing. Remember, it's not listening to any news. It's not concerned about earnings. It doesn't care about what's going on economically. It's only translating the movement and the momentum of the stock. So that would have been a great place to exit in CCI. You would have locked in all those gains, and it would have kept you out of trouble in the sell-off that occurred coming into August. Now, once again, A lot of people may be saying, well, Steve, this is all great. I love this, but I don't trade stocks. Well, here's a chart of crude oil. All right, let's say you trade commodities. There were two buy signals generated using strategy number 4, and they were both confirmed once you added the PET D. So you can apply this to commodities, coffee, bonds, gold. It really doesn't matter. And you can also apply it to intraday trading. Here's a 5-minute chart of the E-mini futures. As you can see here, two buy signals were generated, and they were both confirmed. And you think you could have used any of those exiting strategies I shared with you today. Now I want to show you one really nice setup that happened. Do you remember when all the news came out about Brexit? And this is where traders love to fall into the victim role. They say, oh boy, you know, all this news comes out, all these high-speed traders, there's no way I can trade this. It's silly. If you have the information and you learn how to listen to the market, you're able to trade regardless if you're holding positions overnight or if you're intraday trading, as in this example. Now this was the day the news came out about the Brexit vote, and the market fell out of bed. And as we can see here on this 10-minute chart of the E-mini, we had a really strong opening to the downside, the gap to the downside. But then we continued to go lower. Now, how could we have known in hindsight to take advantage of this? Well, if we had just used strategy number 4, there was a sell signal. So strategy 4 was giving us a sell signal roughly about a half an hour into the day, telling us to short. But remember, that was a very volatile day, and we didn't know the market was going to go lower. So how could we have given the confidence to take that sell trade? You had the PET D. And as we can see, the PET D was red. So it gave you the confidence to take the trade. Okay, remember, we are not a system-based company. We're not a strategy generating company where to tell you what to buy and sell. We simply give you this information, tell you the million ways in which to apply it, and then let you decide. You can take a trade or not. It's up to you. You know, this is not a system where you have to take each and every setup. And then lastly, if you're a currency pair trader, we'll look at an entirely different market, an entirely different time frame. Here is a monthly chart going back a couple of years, excuse me, in the Canadian dollar. All right. A buy signal was generated using strategy 4, as well as being confirmed. All the bars were green, and the Canadian dollar went up 3,500 pips in the next couple of years. Do you think you could have applied any one of the exit strategies I shared with you, even on a monthly time frame? It makes absolutely no difference. And even if we're going straight down on a 10-minute chart of the E-mini, you could have used a 9-period exponential moving average. You could have used pivot highs to tell you where to place your stop. You can use all the techniques or on a monthly chart of the Canadian dollar. Okay, now before we go into question and answers, I want you to ask yourself a question. Do you think any of these edges I gave you today and revealed today could have helped you trading this past year? In fact, go back and look at your last 10 or 20 trades. Do you think the exit strategy I just shared with you could have helped you a little bit, at least to stay in the trade longer, or not to get out so quickly, or maybe to exit before your trade turned into a loss? Those are all yours, free to use. You can start applying them as soon as possible. Remember, we're all about educating you. You can see how much attention we give to detail, because we really feel strongly that the only way you'll become a consistent trader is if you educate yourself with things that have stood the test of time. Now, I can't think of anything that has stood the test of time more than the special attendee discount we have for you today. This is our strategy number 4 and PET D tool combination. We call this our dynamic duo once again. Here's what we're offering you today, and this is for today only. This is our today only special, because if you combine these two things, strategy 4 and the PET D together, roughly the cost is thousands of dollars. That's how popular they are. But we're giving you a great, in fact, it's unbelievable discount today for having both of these. You're going to get instant course access, detailed instruction. We're going to give you all the rules, signal alerts, 4 PET D trading techniques, and this includes both add-ons. This includes the indicators to tell you when a strategy buy or sell signal has been generated, as well as the PET D color bar tool. All right, this is all included, and we're not stopping there. We're also throwing in email alerts. All right, for a limited time, we're also throwing in email alerts, and when a signal is generated, you will be getting an email alert from us just to show you what to look for. This is educational, though. Remember, we're not telling you to trade these. We want you to check your work, because ultimately, you're going to be spotting these on your own. And this is just a way for you to know if you're in sync with the methodology, or if you're entirely out of sync and you need to call me up or contact me and get some information on how to actually implement the strategy because you're off. So as you can see here, on the 3rd of August, DVN generated a buy signal using strategy number 4. All right. So if we look, the signal was actually generated on the night of the 3rd, but our entry for conservative traders would have been the next day on the 4th. If you were more aggressive, you could have entered on the 3rd, but it's up to you once again. So looking at this, you're saying, well, boy, how can I go long this? Once again, it looks like we're going sideways. I'm not too sure about the market. Summer months are prone to whipsaws. I don't want to really get involved in something that I'm going to lose money, all right? With the dynamic duo package, you can feel more confident because once you apply the proprietary PET-D color bar tool, what color is the setup bar? Green. So that's giving you the confidence to take the trade. And as you can see, the dynamic duo generated 8 points in the next 3 weeks. Do you think you could have applied any one of those exit strategies I taught you today? All right. So this is the beauty. Now you know why our students love this package, because they have written us and told us how it's increased their odds for success by adding consistency to their trading. We're not going to sit here and promise you that every trade is a winner, but we know that when we do have small losses from time to time, many times they are quickly recouped on the next trade. And remember, you can use strategy number 4 and the PET-D for intraday trading. You can use it for weekly and monthly bars. You can use it for commodities, for futures. You can also use it for currency pairs. It makes no difference. So if you say, well, Steve, I'm not a stock trader. I trade currency pairs plus futures. Great. You can apply it to both. It doesn't matter. Nothing's changing because we're switching markets time frames, okay? All right, so as I stated, this package will cost thousands of dollars. Here's our special, and this is today only, okay? This is only going for today, so if you want to take advantage of this, you have to act quickly with Pro Trader Strategies. We're offering you this as a dynamic duo package of strategy 4 with the PET-D tool, all the indicators and everything here you see above, for a one down payment of $497 and then a monthly payment of $97. Now, if you want to have limited access to the PET-D, that costs you just close to $3,000. That's just for the PET-D. So you see here, this is a great, great deal right now, okay? This is one day only. We're not going to sit here and say, well, don't worry, take your time, watch the video, get back to us, and we can come up with something maybe in another couple of weeks or next month. This is only for today, so you have to make a decision. But I've just given you examples in virtually every market, in every direction, and in every time frame, okay? And in good faith, we share with you 5 exit strategies. So we gave you a lot of great free information today. Here's how to take advantage of that for this 24-hour special. Once again, contact Pro Trader Strategies, my sister site. They handle all the marketing, promoting of my courses. You can email them at trading@protraderstrategies.com, or probably the best thing would be simply to call them up directly at area code 310-598-6677. Now, as you see on the very bottom there, that is the link to the actual sign-up deal, so you can get that real great special. But I believe if you go to the chat box, they have posted the link as well, so you can take advantage of that to use their promotional link in the chat box. That is a live link. The link you see on the screen in front of you is not live. You would have to copy and paste that. But simply use the live link. That's probably much better, okay? All right, I'm going to leave this information up here. We still have about 10 or 15 minutes for any questions, and I want to thank you for holding off. But once again, don't take a lot of time to think about this, because this is for one day only. Daniel says, Steve, the biggest problem I have is that is that 50% of the time I'm being stopped out before the rally begins, placing stops too early. Daniel, that's very common as well. We have a number of different stop placements in our courses. Many times we give you a stop placement that is for conservative traders, other times for more aggressive and more traders that have a larger account. We have, I believe, upwards of 5 different ones. So, if you're a member of our course, you can take advantage of all those and see what would work better. And many times, it's also with our strategies in those type of whipsaw markets, they will keep you out of that. The PET-D will keep you out of that as well, okay? Let's see here. Nanak says, the range extension exit would not work here because the setup bar is too small. Well, that's true. That's why we gave you 4 more different ways, okay? If we just share with you the range extension, we realize that sometimes people trade tick charts, and maybe the move on the range extension is maybe 5 or 6 ticks. That's not enough to really, trade with anything. So it's up to you. Then use the 9-period exponential. We gave you tons of information here to use and apply so that you'll be able to, apply one that works best with your style of trading. Martin asks, for exit strategy number 1, that is the range extension, do you take the body for range extension or you take the extreme values for range extension? Yes, Martin, we take the extreme high and the extreme low. So in other words, not everyone trades with candlesticks, not everyone trades with open, high, low, close, but the extreme high is the same for each one. So the high on the open, high, low, close would be the high of the wick on the candlesticks. That's okay, but the range, for some reason, I don't know why, but for some reason range has been now transcribed to mean open and close. But that's not what range means. Range is the high of the bar, the extreme high, or the high of the wick to the bottom of the bar, the bottom of the wick. That's what the range is. It's not from open to close. That's the open to close range. So we take the extreme range from high to low, and then whatever amount that is, it could be 3 ticks, it could be 3 points, it could be 10 points, and then you simply double it, okay? Now, a lot of people are saying, well, Steve, how long, this is great, but how long do we pay the $97 per month? Well, you can pay until you cancel, or you can also pay a lifetime payment, but that's something you have to contact Pro Trader Strategies, okay? Because once again, they handle all that portion of the company. I'm just the educational portion. So any questions about payment plans or how long you have to pay, that's entirely up to Pro Trader Strategies, so contact them. Mariano asks, how long do you make available the trade alerts? The trade alerts, in terms of the email alerts, if that's what you're asking, I believe that's for a year. But trust me, we don't want you to rely on that because that goes against our entire philosophy, Mariano. Because if you rely on getting a trade alert, what you'll do is turn that into a crutch, and then you'll turn that into a signal service, and that's not what that's not our motivation or our goal. We don't want to just give you signals to take blindly. Some of our students have done that, and we say, listen, these are just as a way to check your work, all right? Because virtually every night there are hundreds of signals being generated by strategy number 4 in the stock markets. And so, you know, we want you just to go to the signal service and see and find some, and then check your work to see if you would have been able to locate that. Most of our students use them for a couple of weeks, maybe a couple of months, and then they don't rely on it anymore because they're able to spot them easily on their own. Okay, and this is what our goal is, to have you do that as well. Next question, what is the lowest time frame charts you would use for day trading stocks and E-minis? Well, once again, this is up to you. This is not something, if I were to answer that, I would be telling you what the best lowest time frame is, and I can't do that. We have some people that you know, will go on tick charts and just a minimal amount of ticks that say this is perfect using our methods. We have other people that say, oh, no, I can't go lower than anything than a 10-minute chart. It's a personal choice, and this is what we encourage. We don't want to be sitting here telling you what the lowest time frame is. The only thing we can tell you is, and this, you know, goes with any strategy, not just ours or anyone's, the smaller time frame, it's going to be, you're going to be subject to more noise, you know, whipsaws up and down. So it's up to you. We just suggest to apply our methods to paper trade. We tell all our students to paper trade for a while, so that you'll ultimately be able to decide for yourself. And you can say, well, you know what, for me, for my taste, for my style, for my personality, the lowest time frame for me is a 500 tick bar chart, okay? All right, that's great. Someone else could say, no, for me, my lowest is the 250 or maybe 100. It doesn't matter. All what makes you feel comfortable is the best answer, okay? Let's see here. People are asking, a gentleman's asking about being able to use the signals on their own program formulas, like you know, different global settings or whatever. That would be something, once again, since that doesn't fall under an educational type of question, contact Pro Trader Strategies. Their tech support and the people there could be able to help you answer that question better than I would, okay? I just use a very standard basic platform. And for those of you who are asking, many people are asking, well, what platforms can we apply these add-ons to? Okay, I'm going to share with you all of the platforms that you can apply the PET-D as well as Strategy 4. It works on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and thinkorswim as well. But with thinkorswim, there's a few changes because of the way they're set up. They won't allow us to apply them on their particular charts. So what we do is we run the free stock data, live data from thinkorswim, and then we apply it to NinjaTrader platform. And we give you all of this. In fact, we set it up for you. So there's no extra cost because of the way, it's not our choice, it's what thinkorswim allows. They won't allow us to be on their program charts. So we just simply splice their data, which they encourage and say it's fine to do, and you can look at both charts, and you have a free NinjaTrader platform where everything will run perfectly on there. And we set that up for you. It's usually done in a matter of moments. We have a tech support that contacts you over the phone, and they do it for you live. Okay, so it's very simple. Let's see. Philip is asking, when a stock gaps down at the opening or below the stop, is the stop ignored? No, usually you're going to get that gap opening. But as I showed you in a couple of examples, usually because of the PET D, and I'm not guaranteeing this, because of the PET D and our proprietary tools in the strategy, most of the times when you get gaps, you're on the right side. As you saw in a couple of examples there were some big gaps to the downside. Well, you would have been short already, or you would not have been in the trade, because our tools are telling you that the market is going lower, so we're never going to buy in a downtrend, and we're never going to sell in terms of going short in an uptrend. We'll always be in sync with the trend, and therefore we have found, it's been my experience anyway, that most of the gaps occur in the direction of the trend. Okay, so not to guarantee this, but you know, oftentimes our stops will not be hit, but when it does happen, yes, the specialist rule is to guarantee that stop. But oftentimes, I believe they're not even having the stops anymore in certain stocks, so it would be your responsibility to exit on your own. It would be a mental stop. Carl says, I came in late. Could you go over the slow stochastic exit strategy again? Okay, Carl, I'll go over it very quickly. But remember, you can request a link to this recording, and I'll go over that more in detail. But if you want to take advantage of this special, fantastic offer, remember, if you see the prices, you see they're over $3,000 or $4,000 regularly. We've slashed it to less than $500, and then just a small minimal payment per month. But that's only for the next day. So you can't, you know, by day, I mean today only. It's in the next day, meaning today only. So here's what it is. You simply take the slow stochastic tool on any charting software platform, and that is usually default setting at 14. What you want to do is edit that to read 5, okay? And that's what you want to do. Now, when you change it to read 5, it will have more of these jagged kind of bottoming formations on the indicator. That's what you're going to be placing your stop, just below where the corresponding bars are. Remember, it's hard to show without the chart, but the default setting is now changed to 5. It would make much more sense once you get the link to this recording, but I just can't go over it right now without having access to the chart. We have to backtrack about 50 or 60 charts, and I don't know where it is right now. It'd take too long, okay? So that basically is what you would do to get that proprietary setting. Daniel is asking how many forex pairs to follow. Well, it's up to you. If you're, you know, once again, we cannot tell you how many pairs to trade. That would be, we would be turning ourselves into someone who tells you how to trade or how many you should be trading, how many you shouldn't. It's entirely up to you. Some of our traders like to trade multiple currency pairs. Others just like to focus on 1 or 2 while they're day trading or swing trading. It makes no difference. Remember, the only way I have found you will be able to become a consistent trader is by making your own decisions, okay? I can see through every webinar I give where people want me to answer questions for them, to tell them what to do. And I know what that's like because I was like that myself. You want to be told because this is the way we're trained. But a good teacher teaches you how to trade, but he doesn't trade for you. And that's what a mentor should be. And this is what you're also getting, which I didn't include as well in the package. You're also getting nearly 40 years of experience as your personal mentor. You're going to have mentoring correspondence with me. So you can email me whenever you'd like with any questions, anything concerning strategy for the PET D or any other issues you may have, and I'll answer you as quickly as I can, okay? Usually within the next 24 hours. So this is also included. I don't think of a lot of other programs that can say this is all coming with 40 years experience as well as your personal mentor, okay? Let's see, just a few more questions here before we have to sign off. Yes, a lot of people are asking for the link. Remember, yes, the link is through Pro Trader Strategies. They will send you the link if you contact them. Just email or call them. But remember, if you want to take advantage of this, the link that you're referring to is in the chat box. That's if you go to the the GoToWebinar column on the far right, there's a little box there that says chat. Just simply open up that box and there's a live link there, and that will take you to the special link, okay? Now, we're coming towards the end of summer. We're going to be going in to some really nice in my opinion, ways of and environments for trading, because the volatility increases towards the end of the year. As you're seeing here, it's starting to increase now as we were going to the downside. We had some great signals coming into today to go short. Okay, I may be posting them a little later on Twitter. We had some nice sell signals with strategy 4. And our members who are already in this dynamic duo course were able to take advantage of them. Don't wait any longer if you've been struggling with your trading. This is a great, great deal. You can apply this not only to intraday trading, you can apply it to futures trading, commodity trading, currency pair trading. You can apply it to swing trading. It doesn't matter for stocks, futures, commodities, currency pairs. Okay? So there's lots of ways to apply this, but you have to take action today because this special discount is for today only. Okay? In conclusion here, I want to say thank you so much for attending. I hope you got something out of this. As I stated, we are different from most webinars because we like to give you education, free education within our webinar, because it just shows you our intentions. We're not just here trying to sell you something and then make money off you and then throw you to the wolves and say good luck. We really want to educate you. You can see our attention to detail on how we're trying to educate you to become a better trader, because in our opinion, education is the only thing that will sustain you, not some flyby system or some technique that promises millions of dollars. We're not promising that. We're just trying to get you on the road to consistency so you can make your own decisions through techniques that have stood the test of time. Okay? I want to thank you so much for attending today. Remember to go to the link in the chat box that will automatically take you to the sign up to get that great, great discount that is only for today. Thank you so much. I look forward to all of you becoming successful and consistent traders, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.